All right. So let's formally start the session. I would like to welcome all of you for this live session on craft of fundraising. You would want to understand more about how does the fundraising happen. We have a lot of NITI alumni for the both sides. We have an investor who has been investing into the companies as well, and then we have alumni who raised funds as well. So we would want to bring all of them together and have a conversation and learn from that. And I feel privileged to be a moderator for this session. I am Paresh Masade. I am founder of WOW, a company that's into alumni relations for both colleges and corporates. We've been doing, we have close to about like 400 customers, more than 1,000 institutions we work with, and 10 corporates. And I'm from the class of 2009. While I don't have a lot of fundraising experience, I am here to learn and probably ask more questions that are more specific. So here we go. Right. So let me start with introducing our speakers today.
fundraise किया है ना?
I think we'll have to mute. Yeah. Let me start with introducing our speakers. First, I think everyone knows him, Dr. Ganesh Natarajan. He's from class of 1981. He's the founder and chairman of 5F World, Lighthouse Communities, and also a chairman of on the board of directors of many companies, including Honeywell Automation, SBI, and all. And he's specifically very passionate about skill development, livelihoods, and associated with a lot of social enterprises. So a couple of things that he has founded and part of the founding team are Global Talent Track, Skills Alpha, Calzoom Advisors. Actually, many, if you look at, like, he's been involved with many initiatives, and he's been an active investor as well as a mentor. So welcome to the panel, Dr. Ganesh.
Thank you.
Next, we have Soulyanju Medda. He's from class of 2005. He's a founder, CBO, CFO of Dealshare, which is specifically looking forward to disrupt the
for some time, 4 o'clock.
Yeah, which is specifically looking forward to disrupt the social commerce space in India. He had a corporate experience for over 12 years, and then started this company about 3 years ago. So they have raised a good amount of money. I would want to I would ask him to share about that details, but a decent amount of money they have raised over the last few years. And welcome to this session, Soulyanju.
Thanks, Paresh.
Then Deepak and Maneet, we have Deepak is again a junior of mine, class of 2012. He's the founder and supply chain leader from Shopkirana. So I take a privilege of knowing both the companies from the early days they started, right? So Shopkirana has been doing really good. They've been connecting the retailers with the suppliers and distributors across the country, and again has raised a decent amount of money, about 12 million. I remember like 12 million from InfoEdge and a few others earlier as well. So welcome to this session, Deepak.
Thank you, Paresh.
Yeah, thank you. So, and the fourth, Maneet. Maneet is from class of 2015. He again was a student of mine. He started Lal10 while in the campus. I remember that again. And it's specifically looking forward to connect Indian artisans and global retailers. So the company which started off campus and then recently raised during the pandemic, I think just before the pandemic, they raised a good amount of money, about $1 million from various investors, including AngelList. So welcome to this panel, Maneet.
Thank you, Paresh. My pleasure.
Thank you. Right. So let me, before we begin, and I gave a bit of introduction, right? But I would want to hear a bit more from you, specifically on lines of what are your what is a quick one-liner or 2 lines about what do you do, because that will be giving more insights. I may have missed up a lot of things, and a bit about your experience on related to fundraising and venture capital industry as such. So Dr. Ganesh, can you start that with, we want to know a bit more about your work as well.
Sure, thank you very much. And it's a real pleasure to be here with all of you. And to put my entire life into 2 minutes is going to be difficult, but I'll try. I left NITI, as you know, in 81, then joined a boring job in Crompton Greaves. And 4 years later, somebody approached me out of the blue saying that, look, you're doing computer work in Crompton Greaves. Why don't you set up your own company? And we'll give you some small amount of money. So I said, okay. And this was in the city of Bombay. And we quickly realized that we'd run out of cash in maybe 6 months' time. So I actually sold this idea to a shipping company that would give us an office, give us all the infrastructure, etc. And they became a joint venture. So I ran that for 3 years and then realized that, it's nice to have friends and nice to have family and nice to eke out a living. But I kind of thought that wasn't what I was intending to do. Then I had 28 years of a fantastic run in the corporate sector, as many of you know, NIT, Aptech, Zensar, had the experience of listing Aptech on the London Stock Exchange, had the experience of raising huge amounts of money for Zensar, primarily from Apax, which is a big private equity company. And the Zensar share was at that time we actually raised money at 850 rupees per share. And it was one of the very big deals in the market. Then I left Zensar, and Fifth World today is, I think you've already mentioned it, but we started it with one company called Global Talent Track, which my wife runs, and she is now the executive chairperson of that. And we started it when I was still in Zensar and she was still in HSBC running global corporate strategy. And somebody approached us saying that, look, both of you have such fantastic experience and skills. Would one of you become CEO and the other one join the board and really take it forward? By that time, I was smart. So I said, no way I'm going to do it on bootstrap. So we actually told them, look, if you put your money where your mouth is, then we are willing to quit our jobs and get started. Or at least Uma was willing to quit her job and I was still running Zensar. So I remember we raised 24 crores, even without her having resigned from HSBC. And because we raised 24 crores from Intel Capital and Helion Ventures, immediately Cisco was a client of mine, said, look, can we put 12 crores as well? So literally we had 36 crores in the bank before we started the company. So that was a good experience. And even today that company runs at almost 45% EBITDA, which I realize is not fashionable. In e-commerce, you don't talk profits. You talk about long-term vision and all that stuff. But so that was a good experience. And since then, to conclude, 5F World is primarily an investor in digital transformation. So we've invested in 9 companies and 7 of them have been successful in money raising, and all with very, very different formats, very, very different instruments. So I'm really a student of fundraising even today. And I learn a lot from people who are doing it, and love to hear from DealShare and of course my friend Manit and Lalten, how you guys are doing it and making it happen. So this is very quickly where I am. Happy to answer any questions or give you more details on anything as we go forward. Back to you.
Sure, Doctor. And Mr. Sobhendu, what would you want to share?
Yeah, I think Dr. Ganesh has already highlighted how e-commerce in companies actually have to run their journey on the fundraising side. And so a lot of our journey is like that. And just to give a brief background of what I did first and how did it all start up. So after passing out from NITI in 2005, I spent my entire life on either FMCG companies, large-scale FMCG companies, or large-scale retail companies. So both sides, on the brand side as well as the retail side. And I worked for around 13 years post-MBA, equally distributed between brands and retail. And while I was working there, I realized that these top brand retailers or top brand FMCG companies are actually spending a lot on sales and marketing spends, and as a result of which the mass consumer of India is actually not gaining. So on one side, we still have very low per capita income. And on the other side, such wastages into sales and marketing channels by both sides of the supply chain essentially means that affordability of mass India is going down and it is not increasing. So and there is obviously no government initiatives which are noteworthy to increase the per capita income of the population. So that is where we started thinking about this. I had a very good school time friend who was a techie. He is an ex-Microsoft guy. So both of us came together. I understood the entire mass consumer space. He understood deep tech in terms of artificial intelligence and other tools, data sciences and all. So we came together. We decided to create this entire opportunity which disintermediates SMEs in the country, especially on the mass consumption space of grocery and essentials, and the end consumers. And when we define end consumers, these are true middle income population of the country, which has a household income of less than 50,000 per month. So our e-commerce space is very, very differentiated from all the names that we hear, which is and back in 2018 when we thought about it, Amazon, Flipkart, BigBasket, and Grofers were the leaders and still are the leaders in the e-commerce space in terms of volumes. So however, worldwide there were these community group buying models, especially at that time. PDD was becoming Pinduoduo of China was becoming a huge success because of their CGV model. So we pioneered CGV model in the country, in the grocery and essential space. We went away from the thought of CGP models where basically taking cue from China. Most of the Indian startups were trying to do that in electronics and long tail fashion space. We said it will not work for a country with low per capita income. So it is necessary to get into grocery and essentials if we have to make that happen. And in spite of a lot of basically opposition from multiple people whom we knew in the ecosystem, we said that our thesis is very clear. We will go ahead with this. And today, obviously, we believe that we have made a large organization. This month, we would be doing 100 crores of revenue within the month. And our belief in our model has basically taken us till here. On the fundraising, so very interesting part. It is like a Bollywood movie. I will let you know more details, but I would basically start with a very small brief on this. I think from day one, we knew that we have to create a Dabang kind of story if we have to, because Indian e-commerce is full of mighty people with a lot of capital. So if our story is not like a Bollywood blockbuster, we will basically be wiped out from somebody who has lot of capital. So we were, while we wanted to always create a good path to profitability organization. In e-commerce parlance, today we are amongst the most. So even if it is negative EBITDA, everybody is negative EBITDA, but we are the best at this scale. Any e-commerce company in the country has not reached this scale at that kind of EBITDA. We are almost at -10 or below. So that kind of EBITDA we don't see in e-commerce in India till now. And we are like 10x more capital efficient than every other e-commerce company. I will not talk of Deepak's company because that's a different model altogether. I'm talking of B2C e-commerce companies. Obviously, they will have a much better EBITDA. But our need for capital was always less, and our path to profitability was always fast. But we always said that we need a war chest of capital if you have to fight the might of Amazon, Flipkart, BigBasket, and Grofers. So we started creating a Bollywood movie kind of scenario where we said that first the founding team has to be a star-studded team, so that the investors are basically wanting to put money only in the founding team by hearing a story and not really seeing the company to making. So we had a first term sheet of 1 million even before the company was incorporated. Now there are a lot of large stories there. We rejected the term sheet and a lot of other things happened, and then we went into. So now we have 4 rounds already in, 35 million of capital already raised in terms of majorly equity, some venture debt as well. So I'll also let you know how venture debt works and so on. And the other big news is already out before I wanted it to be out. So I will wait for that too. And then maybe we can have that discussion later.
Sure. Then there will be lots of questions that will come for you specifically as the story cuts out. So let's go to Deepak. Deepak, would you want to start with?
Yes. So I would quickly brief about kind of my career also. So before Shop Kirana, I was working with Procter & Gamble, and with P&G, I did 2 kind of assignments for them. One was in their supply chain, and another was into their capital systems and deploying capital into their baby care business in India. So my personal interest and excitement was always into FMCG, retail, building brands, and hence reaching masses of this country. And personal side, like my family runs a retail store, and when I was in P&G, I was not able to connect the dots, and that is where my journey started. And I thought India is e-com plus modern trade, but the general trade is very, very heavy. And in terms of volumes, it will grow like anything, whether in terms of percentage slowly, but in terms of volume, it will still remain one of the dominating kind of channel. And hence I left P&G. And before leaving P&G, I started working on the idea and conceptualize the things. And in terms of fundraising, it was not like Medda, where it was not a Dabang movie kind of thing at our place. But yes, we kind of steadily and slowly we were trying to build the story. And our approach was like, first get the strong belief in your team and your downline, and then get the strong partners in the journey. And so my first check was not from kind of the investment kind of industry, but in P&G itself, I made great kind of bosses. And before leaving, I was able to influence them and told them, I am leaving, but I want your money. So I raised some funds initially from the people at P&G. Some of them were my boss or boss ka boss type ka. and they became my initial angels. And then it slowly started unfolding. We were able to influence some of the prominent funds from Japan, and then InfoEdge came in, who also believe into building long-term story. That was our kind of way of working. But yes, that is the brief, I think, and then we can do other discussions.
Sure, absolutely. And over to you, Manit, quickly.
Sure. I think, Paresh, it's a pleasure to be here. The elephants in the room are definitely Ganesh. It's a pleasure to be here with Saujendra and Deepak. Congratulations, Saujendra, for the fundraise. I'm at a stage right now where I'm still learning how to build a story. And tried doing that over the last couple of years, and have been successful in bits and pieces, and maybe early entrepreneurs who have not raised any capital. Maybe I can share some of my inputs there. About myself, I'm a graduate of 2015 NITI, and post which I worked in Flipkart. The journey of Lalten started while I was student at NITI, literally from the hostel room. I used to get 6,000 a month from my father to run my OPEX for hostels. I didn't have money to eventually run the company, but while coming downstairs of the stairs on the PPO road, there was a canopy of Canara Bank, which was giving non-collateral loans against the receipt of your yearly annual fees. And that became the first funding. I didn't tell my parents and got that to run this company. And then I had to join Flipkart because my parents didn't agree to do what I have been doing. Though I am a Gujarati, my parents had to believe in business, but unfortunately, my father was working in a PSU, so he said that you need to do job. And I went to Flipkart, found interest in two of my other co-founders. One of them has been with me in NITI, and together we all started Lalten full-time in Bangalore. Didn't know how to build a story, struggled for almost around 15 months, bootstrapped, understanding what we want to do, product market fits. Primarily at Lalten, we figured out that we want to be a company which connects rural SMEs across the country who are making textile-led products to global retailers. And that's what we have been doing. The potential is huge. The entire market is extremely the potential is huge there, and it's not yet targeted well. And that's what we do overall. Today, we connect around 1,800 such SMEs to 400 retailers across 18 countries. I think that's what I can say. Over the period of last 2.5 years, we've raised around $1.8 million in 2 investment rounds. And I would be happy to share my journey there. I think one thing which I can say is that to raise capital, and if you are from NITI, you need to have blessings of Mr. Mandi. So Dr. Mandi has always been there as a shadow in our lives. But yeah, over to you.
Sure, Mani, thank you for that. So thank you everyone for giving a quick brief. Let's get into the main part of the question and answer. I would so basically the way we would structure is that I would specifically have few questions that I've listed down, specifically from my fundraising experiences and what I would want to learn, and then got few questions from insights from others as well. So we'll drive through that. The primary question is what is everyone wants to know is about. Why do some startups get funding and others don't? Okay, and I think every one of you touched upon the major point is that a storyline is important, and you were speaking about how do you build a storyline. Before we get into that, I think that's going to be a big thing. Before we get into that, because there are a lot of people who haven't raised any money as well. Can someone brief quickly about what is the fundraising process happens? Like say, right from your day, some interest comes in, you get a term sheet, and how does it go? Can you just quickly brief about how it works? Maybe Saujendra, you can just quickly give an idea. You're on mute, I think. Yeah.
Sorry, I was not able to unmute myself. So,
sure.
Can you repeat the specific question once? Because I heard 2-3 questions. So what is the specific question here?
So the journey from the day some interest comes in to the fundraising deal closure. So how does the process work? Quick brief, not about how technical, more the technicalities of it.
Yes. So from the So when you scope out a lot of investors, obviously, first you have to scope out the investors which are relevant, and you have to keep it really sharp, because otherwise you will waste a lot of energy going around across many investors and you will not be able to attract attention. So you have to find out, you first think what the thesis of the investors are, and basically focus really on those where you will sell well to them. Now, the moment one investor whom you like basically shows interest, it first translates into a term sheet. Till the time you get a term sheet, a formal term sheet on mail, and a signed term sheet, nothing starts. So they might say that we like you, we love you, all of that doesn't work. Till the first mark is to get a term sheet on your mail, which is signed by them. Now, once you get that, they basically then get into a full diligence process, and sometimes it can be painful. Really depends on how sought after you are in the market. So if the company is sought after really well, the whole diligence process is small. If you are basically trying to attract somebody and not many people want you, then the diligence process can go as long as 4 to 6 months. Now, there are 3 types of diligences that happen. One is a necessary financial due diligence, which is basically checking your P&L, your MIS, and basically matching all the terms and your bank balances. So a financial DD is a pure check of all financials, whether the reporting is right and everything is in line. So that's one. That's most important. The second one is the legal due diligence, whether all the structuring of the company and all the documentation required for running the company as per governance given by the country's laws, is all of that in place. And so that's the second part. And third is, they also, so while they might show interest in your story and they might have done some bit of first level business diligence before giving a term sheet, generally they do some level of business diligence before giving a term sheet, but large scale business diligence also is carried on while the FinDD and legal DD is going on. And this DD process actually is a 2 and 4 process, where they would do a lot of analysis and come back to you with questions, and you have to answer and everything, right? So once these 3 things are over, the documentation starts, which is primarily the shareholding agreement and the share subscription agreement. So these are the 2 main documents, SHA and SSA. And on top of that, there are some other secretarial documents that you need a company secretary to take care of. And you obviously need to appoint, if the large rounds become large, you need to appoint. There are specific law firms in the country which basically specialize in funding rounds legal documentation. So you need to do all that documentation. Once the documentation is signed, then there is a period by which the investors need to wire the money. The money is wired within that period. And post that, you need to basically complete some more secretarial work. And that secretarial work also includes issuance of shares to the holders. That marks the completion of the round, when you have basically issued shares to your investors. So this is the whole process.
Right. And how long does it take each of this, like from the term sheet to maybe SHA, the day SHA is signed? How much time does that take usually?
So it really depends on demand supply equation. If your demand, if the market demand of the company is really high, it can close in 15 days also. And if you are seeking investors, it can take 6 months as well.
All right. Okay, that's a good technicality. Basically, there's a term sheet, then there's a DD, then there's an SHA agreement signing. You have after that investors wiring the money, and last is the share allocation and the secretarial thing. So that's the technicality of it. Now that's probably much simpler. The questions would be, so Ganesh, I think I will start with you here. What would be 3 things that an investor would look into before investing in a company?
Thanks, Paresh. Now, first, let me just kind of give you all the landscape, because I wasn't too sure how much you know about the entire fundraising horizon. Because you first start with friends and family. In fact, before we started, somebody was talking about still doing friends and family. That will take you to a certain extent. But imagine that your company will require a capital runway of, let's pick a number, $100 million, maybe over the next 10 years. Okay. So the way you have to look at it is there are at least 7 stages of finance. You need to know at which stage you are. Like Maneet mentioned, raising 1.8 million. So clearly that's a pre-VC kind of, because a VC today does not invest anything less than $3-4 million. So you're talking about maybe angel investing. There are multiple angel funds in this country. I myself am an investor in Indian Angel Networks, One Crowd Networks, CSVP, and there are probably about 100 more. So each of them are good to give you 2 crores to 3 crores, not a problem. Then you move up from there to VC, and a VC round nowadays will take you, I mean, unless you're lucky, will take you 3 to 5 years to get there. And I think what you just heard from Sojendu was, in terms of, let's say if you're raising 5 to 7 million, that's what Series A is all about. And then Series A, maybe another 3 years to Series B and Series C. Then you raise, I'm an investor in Kedara Capital. And in Kedara, what we do is we don't do ticket sizes of less than 50 million. So we'll only invest 50 to 100 million. So you'll reach that stage. And beyond that, private equity investor, depending on what stage their fund is, within 3 to 5 years will want to exit either by selling to somebody else or to get you into an IPO. So remember that you have to think of all the stages. Now, many companies, I mean, the first company I invested in was a company called Beyond Core in Silicon Valley. He set up the company. He's a Bengali gentleman from Stanford, then went on to Harvard Business School where I met him. And there he said, look, my only goal is to sell this company at 3x valuation to Salesforce.com in 3 years' time. India mein aise hum sochte nahi hai. India mein we still think we are Adani and Ambani and want to build this company for the long term. But reality lies in how quickly can you also exit the business. Okay, and this person, I mean, you'll be surprised. I gave him a $50,000 check. Within 2 years, 8 months, I got 50 multiplied by 10 from Salesforce.com. And he said, look, I didn't even tell you, but when you see the Salesforce.com check, you know that I'm doing it. So I'm saying there are investors who are very, very smart and there are entrepreneurs who are very smart. But quite honestly, to answer your question, I think what investors are looking for is smart guys. And we keep investing. We just look at 5 things. What is the power of your idea? Is it unique or is it one more Me Too idea? Some Me Toos also work. I mean, if you look at Oyo, if you look at Ola, etc., but that's fine. But a lot of people come up with very unique ideas. I'm sure, I mean, DealShare, for instance, is a very unique idea. Lalten is a fantastic idea. So power of the idea, business model, which is where, how are you going to really scale it? And are you just with a great idea, don't know how to sell? The strength of the team, the strength of the board of directors or mentors that you accumulate around you. And finally, what I just said, the capital runway. So if you've kind of thought through all this, then your likelihood of sustaining till you sell the company or sustaining till you do an IPO or whatever your ambition are is that much easier. So I think just have clarity on why you're being an entrepreneur and what is your next maybe 5 year steps.
So I think the point that you touched upon is important. So one thing you were speaking about is the idea, right? So how important is the idea? Because we keep hearing about the question that comes always is sometimes a Me Too idea gets funded a lot, and sometimes very unique ideas also don't get funded. What would be the reason there? Because while idea is powerful, how important is that in a fundraising process?
I think it's absolutely essential. Like when we started Global Talent Track, I mean, it was purely on the strength of an idea. Because both Uma and I, Uma was my wife, and Uma and I both said that, look, the standard model is skills mein kya hota hai? I mean, which is why sorry to say this, but the skills mission in India, the NSDC, I mean, utter failures. Okay, because you decide ki humne ye skill karna hai. So I set up, let's say, a plumbing skills institute or a financial services, and then you say, I'll do it and they will come. It doesn't work like that. So we said, we will first go to understand demand. So we said, we'll go to Infosys and Cognizant and IBM, etc., and find out what skills are they going to recruit in the market next 3 years. And then we'll tell them, look, we will get people from second-tier institutes, train them to your specification, will you take them? And our entire business was built. It's called the hire, train, deploy model. So we first find the demand and then come back to it. So it's not a very unique idea, but it still kind of turns the whole skilling ecosystem on its head. You're not finding your beneficiary first, you're finding the customer first. So that's just one example. I mean, even Zensar, just to give you one last example, why we were so successful in Zensar. Remember when I took over in 2001, we were a 40 crore company because it was existing. I won't claim to be the entrepreneur, but we grew it to 4,500 crores in 16 years, purely on the strength of an idea that we will do programmer-less programming. Sounds funny, doesn't it? Because the whole Indian industry is looking at cheap, high-quality programming. And we said, you just give us your use case and we will convert that to code for you using automated tools. Now, honestly, between you and me, it was all bullshit. Okay. But that was the idea. So when we went to a Cisco or a Marks & Spencer or a Fujitsu, and they said, wow, you guys can do this. We said, yeah, of course we can. And they gave us that initial order. And then we kind of came back and of course did it by programmers. And then we went and said, our magic formula has done that. And suddenly before you know it, we were from a 40 crore company, we were a 2,000 crore company. So I'm saying, unless you have a powerful new idea, forget investors, you need customers. Customers won't listen. So why did a Cognizant come to GTT or a Marks and Spencer come to Zensar is because we came with a powerful new idea. And once you're able to show that kind of marquee customers, then automatically investors will line up and say, where can I give you the money? That's the difference.
Okay. So I think I'll turn this question to Maneet as well. Maneet, I think yours is a very unique and different idea, at least like in terms of scale and things. But you took quite some time before you raised funds. What do you say? How important was the idea? Did you turn your ideas into something to put up a good story on that? Or what was so important? What changed? How do you look at idea as a question?
I think story building is important, but it's not only the core. As you raise capital, what I understand with our journey is that while we were in the first few months, up till a year, 15 odd months, we were very much focused on to finding what value we want to add to our sellers and our buyers. And we took certain time because we were working with an unorganized sector and all. Funding news and funding still seemed like a very far-fetched dream. We couldn't believe that we could ever raise any capital. We thought that whatever capital we might raise would be good. And while we got our first term sheet, we got it from the CEO of ITC. And even after that, we took almost around 3 months to close our entire round. And time and again, I seek his help in terms of if he's wealthy, he's well known in network, and if he can help us connect with other people. And he never helped us in that way, but he always said that an investor would want to invest into your company if he gets to hear about you good things from 2-3 other people or sources, right? And that's also very important. More important is that in this all, we forget to run a business, right? And it's very important that your first set of investors is your buyers. And you need to focus on that regular cash flows rather than building those storylines. I think that worked out well because we were 3 co-founders. 2 of the co-founders, which I have consistently started working, they were working on the idea and executing it. While some of my bandwidth was in terms of reaching out to investors. And as we closed our round, I think the first thing I asked investors very honestly and bluntly is that why did you invest in Laltan? And I think many of them did say that we liked the journey, we liked the way you work, the market you want to tap, but more importantly, we found that you guys are honest. And that is very important because in the first round, people are not putting money on an idea or the traction, but they are primarily putting money on you, is what I understand. And I think that's something which you have to make sure that you're doing justice for this and not for the sake of raising capital in itself. Yeah.
Yeah, I think the question again backs. So I think also there's a question from audience as well saying, how much of is from Govin? How much of this is about story versus actual numbers? I think Sauryan, you mentioned about you were able to get an in interest of almost $1 million before even you started, right? And you said mainly about the people that were important. You said we built up a team that was ready to raise funds and ready to launch. Like how much is that important? The Bang story for you?
Yeah. So I think. Yeah, I think there are when you start. I mean, at the initial stages of the startup, the 2 most important things are the founding team. So you need, if you have, I mean, obviously you can get funded without a very strong founding team with proven track record. But if you have a strong founding team with proven track record, in our case, it was not just proven track record between the 4 of us, but it was also diverse experience. So all 4 of us came from extremely different backgrounds, all 4 very, very different backgrounds. So which is basically a good mix which investors look at, because then the most important part that they also think is business continuity. How can, if there are like experienced people with proven track record and diverse background, all responsible people, then the business continuity is ensured, and also performance to an extent is ensured because people have performed for the last 15-20 years in their career. So that is the one very important part. And the other part, which is extremely important, is your vision and the story. So like Dr. Ganesh also pointed out, that there are Me Toos who get funded. There are Me Toos who keep on getting funded to a certain extent. But if your story is truly differentiated, and your TAM, target addressable market, is really large, then attracting investors become really easy. It is not just attracting investors, like Manit also pointed out, that a differentiated story with a large market and clear focus on profitability and capital efficiency is also easy for you from an operational perspective. You can run the business easily because you are very clear what you are going behind. In the initial years, you don't have a competition because nobody is thinking like you are thinking. So you are running without any competition. So you get a runway to grow really fast. And that whole story and the founding team is, so as a conclusion to this answer, I think the construct of the founding team and the differentiation in the story and the largeness of the story are two most important part on fundraising.
Right. That part of largeness of the market will come, something that will come back. I think here, Deepak, question for you. Specifically, as you are also into, so you were specifically, when the market was about e-commerce and all, you were specifically focusing on the B2B specifically there. So how important was your idea unique, and how did your investors receive the idea as such?
No, our advantage was we were the first mover in this space, and actually when I was in NETI, I met Mr. Prasad and Dr. Prasad, and I told him I have an idea and I want this to be disrupted over our next couple of years. And he told me I will arrange something for you. So I went and met the CEO of this I forgot the company's name. This book selling company. Sorry, because they are now, what is it? The Crosswords. So I made him. I told him this is going to happen in India. The distribution is going to be democratic over a period of time. And he said, no, this is not going to happen. India works in a different way, and I don't think it will work. And he said sorry to me in CCD in Hiranandani. And then again, so consistently I was thinking about it when I was in PNG for next 2 years. India was kind of a 900 billion overall retail market. I was targeting 500, 600 billion market, which is into grocery and dominated by these mom and pop stores. And consistently I was observing e-com was, especially in grocery, was not able to penetrate till today. Like Big Basket is doing 4,000, 5,000 crore, Groffer 2,000 crore maybe. I was not excited actually. My personal target was at least out of this 500 billion, I should eat away $20 billion. So, but consistently then in our team, we were checking two things. One is, for this $20 billion eating away this, we need to learn two things. One is how to raise a lot of money, and second is how to make a lot of money, because $20 billion, no investor will be able to fund. So actually when we were raising, we were consistently going back into boardroom and saying, are you consistently making it profitable? And good thing about Shop Kirana is we are profitable in some part of the territories now. And so we have two journeys together actually. We have to learn how to raise a lot of money. At the same time, we have to learn how to make a lot of money out of the business. And hence our journey is not like rocket. We always raise funds, come back, work, then go back, raise funds, come back, work. And but for startups, I think idea is obviously important and execution is the next thing. But so idea should have a litmus test. Every startup will not be kind of a $1 billion startup. So you should have a litmus test maybe, and I classify startups into 4 or ideas into 4 classes and do the litmus test whenever I actually talk to people. One is where a lot of people are investing nowadays is infinite customer base, no revenue today. We will check the network effect of it over a period of time. So this is like Dukaan, this is like Facebook, this is like, so initially infinite customer base, and that is where people think a lot of network effect can be generated over a period of time. So that is happening. That is where people are investing. So is your idea going to Cred is suppose that idea. I will first do the infinite network and then I'll build something on that network. And for that you have to be backed by that kind of the people who जिसको इतना courage है, जिसका इतना सीना चौड़ा है कि यार 6 साल तक तो समझ ही नहीं आएगा कि 1 रुपया कमाएंगे क्या out of this network. But let us build a network which is not owned by anyone. First own that network. So if your idea lies into it, you have to find this kind of investor जो 6 साल तक 1 रुपए का हिसाब नहीं पूछेंगे आपसे कि कहाँ से पैसा आएगा, and they believe on that story. Another idea can be connecting the dot using technology, disrupting and creating some value, not disrupting the entire ecosystem, but by connecting the dots, you are building 10-20% का margin, which is like suppose there is so Marriott होटल है, मैं बोलता हूँ कि आपकी होटल का नाम गणेश है, तो गणेश के नाम से तो आपकी होटल में कोई आएगा नहीं, आप ओयो रख लो इसका नाम, तो मैं आपके 2 ग्राहक जुगाड़ सकता हूँ, और टेक्निकली फिर I actually increase your asset efficiency. So this is Oyo, this is Ola, this is all e-com companies actually. They so even Medda से भी अपन पूछेंगे तो 10-20% का मार्जिन पे काम करेंगे और कनेक्ट द डॉट्स करेंगे एक्चुअली. ये काफी सक्सेसफुल ट्रेंड है और ये सभी इसी पे खेला जाता है एक्चुअली. जो ज्यादातर ई-कॉम कनेक्ट द डॉट्स है, ये 10-20% मार्जिन बना लेंगे और ये कनेक्ट द डॉट्स करेंगे और एक स्केल एडवांटेज इनको होगा. ये भी लार्ज बिजनेसेस होते हैं बट इनका साइज पहले वाले से थोड़ा कम, इनको पता होता है कि हम पहले दिन से 10-20% बना रहे होते हैं. हम जो 2 लोगों को कनेक्ट कर रहे हैं वो हमको वैल्यू करेंगे, 5% कस्टमर वैल्यू करेगा, 5% सेलर वैल्यू करेगा, दोनों से मिला के 10% कट ले लेंगे, जो ओयो भी लेता है, जोमेटो लेता है, उबर लेता है, ये सब कट बिजनेस है. सो योर आइडिया कैन बी ए कट, टेक द कट आइडिया. And third is actually niche, where no one is there. You are creating the base. You are creating a new kind of new customer base. You are checking कि future के trends क्या होंगे, लोग क्या खाएंगे, क्या पिएंगे, कैसा ओढ़ेंगे, कैसी क्रीम लगाएंगे, और उसको आप बनाते हो कि लोग कुत्ते पालेंगे, फिर वो डॉग फूड खरीदेंगे, फिर वो उनके लिए खिलौने खरीद. ये नए ट्रेंड्स को आप पहले से ही एस्टिमेट करते हो और उसके अराउंड कुछ नीश बनाते हो, which is like building brands like Mama's Earth. सो वेयर यू नो कि लोग थोड़ा सा सेंसिटिव टू वो हो जाएंगे कि कौन से केमिकल्स हैं हमारे, और वहां पे आप नीश बनाते हो, पर आप 10,000 करोड़ की कंपनी नहीं बना रहे होते, आप 1,000-2,000 करोड़ की बातें कर रहे होते हो. 500 करोड़ 100 करोड़ भी हो सकता है इसके अंदर. एंड मतलब मनी वहां पे अपन बात कर सकते हैं जहाँ पे आप ज्यादा वैल्यू क्रिएट कर रहे हो वहां पे, क्योंकि आप बिल्कुल ही नया बना रहे हो, सब कुछ प्रोडक्ट भी नया बना रहे हो, ग्राहक भी नया बना रहे हो, उसके नए बिहेवियर पे इन्वेस्ट कर रहे हो, तो आपका मार्जिन भी 50-60-70 तक जा सकता है. और आपके एक्सपीरियंस 10,000-20,000 करोड़ की नहीं होगी, 20,000 करोड़ पे 70% मार्जिन नहीं बच रहे हैं इस जमाने में, वो फिर 100, 500, 700, 1,000, 2,000 के आइडिया है. एंड फोर्थ इज एक्चुअली विच इज हैपनिंग मोर इन यूएस, लेस इन इंडिया, इज रियली डिस्ट्रप्टिंग एदर बाय कॉस्ट और बाय इनोवेशंस, विच इज एप्पल, विच इज काइंड ऑफ टेस्ला. टेस्ला बोलता है कि पूरी ऑटोमोबाइल ही खत्म करूंगा, मैं नया जॉनरे ऑफ ऑटोमोबाइल बनाऊंगा. ये डिस्ट्रप्शन है, अब इसके बीच में मत आना कोई. तो ये इंडिया में कम हो रहा है कि यार अब मैं पूरी इंडस्ट्री को ही नेक्स्ट मतलब जॉनरे में ले जाऊंगा एक्चुअली, और या तो मैं कॉस्ट से डिस्टर्ब कर दूंगा, विच इज स्पेसएक्स. सो स्पेसएक्स और टेस्ला में डिफरेंस है कि टेस्ला इज डिस्टर्बिंग बाय इनोवेशन, स्पेसएक्स इज डिस्टर्बिंग बाय इनोवेशन फॉर कॉस्ट, नॉट फॉर नेक्स्ट जनरेशन प्रोडक्ट. सो स्पेसएक्स इज नॉट नेक्स्ट जनरेशन प्रोडक्ट. बोलते हैं कि 1 रुपए में रॉकेट भेज रहे हो, मैं 20 पैसे में भेजूंगा, काम दोगे क्या? तो वो डिस्टर्ब करता है, बोलता है नेक्स्ट जॉनरे में नहीं ले जा रहा हूँ, पर आपकी कॉस्ट 1/5 कर रहा हूँ. तो इनोवेशन ऑन कॉस्ट इज देयर एडवांटेज एंड डिस्टर्बिंग द एंटायर स्पेस. एंड दिस इज द फोर्थ जॉनरे जो इंडिया में बहुत कम मिलता है. इतना जिगर और इतना डिस्टर्बिंग द स्पेस कम है इंडिया में. और होता तो फिर मोबाइल में भी हम कर देते, हम कपड़ों में भी कर देते, वरना हम तो लोगों के जूते भी लोगों के पहन रहे हैं. तो डिस्टर्बिंग बाय इनोवेशन कम है अपने यहाँ पे. बट यस, दिस आर द 4 लिटमस टेस्ट फॉर योर आइडिया एक्चुअली. अब सबके लिए अलग अलग टाइप के इन्वेस्टर, अलग अलग टाइप के फाउंडिंग टीम, अलग अलग टाइप का एग्जीक्यूशन सब चाहिएगा, बट वो लिटमस टेस्ट आप कर सकते हो.
So thanks Deepak for summarizing the entire concept of idea on why different ideas get funded. I think very interesting perspective that you put in. Medda, you touched upon an important point of market size. Okay, saying that I think all of you, even GTT or even any of you are here, all of you have been staying in the space of a large market sizes. Now, I'm not questioning why is large market size important. Give me the other way around. Why is large market size important for getting investment? Because specifically, why does it attract a lot of VCs?
So I think large market size is important to attract large investors. So let me be specific on that, because if the market size is small and you are doing a good business in a small market size, trying to create a profitable IPO-able organization, it is a very good thing to do. But at the end of the day, large investors, and if I talk of VCs like SoftBank, Tiger, and then you get into PEs and all of that, they basically have a thesis, not all of them, but most of them have a thesis that they would want to put their money into possibly large outcomes. Now, to have a large outcome from a startup, the target addressable market has to be large. Otherwise, how do you basically create an outcome if the whole space is small? So that is why essentially a large TAM is required to attract large investors.
Right. Ganesh sir, can you also throw some light on this specifically, because giving an insight into how the VC fund structures, because I think it's important for them. They have to give a return to an LP, right? So on those perspectives, why is a large market size, and what kind of money is a VC money?
See, I mentioned this earlier. Let me explain that. Even VCs, let's assume VC has raised a $200 million fund, and you are approaching them at the early stage of their fund. They'll probably think they have a 5-6 year window. So they will be patient capital, in the sense that even if the market size, you're still building the market as you go along, and your company is in that space, they'll be willing to support it. But if you're approaching a VC, and that's something you need to also check out. If a VC is at the, let's say, the closing stages of the first fund, they have to start returning money to investors. In which case, they're not going to be interested in market building. In which case, the market has to be established, and you have to be able to prove to them that you can also quickly make money and make this happen. So I think those are the two things. But to your first question, it's always good to be in a large market, because if it's a very, very small market, and let's say you're the first player, all it needs is a better me to come in and either cut costs and completely destroy the market. So that's something they'll always be worried, which is like, look at why Flipkart got massively funded. It's a huge market. So even Amazon is so what? So Flipkart is there, it'll get Walmart, it'll get everybody else. And similarly Oyo, similarly Ola. So anything which is seen as a very quickly expanding market, which is part of the shared economy, which is what everybody looks at nowadays, you will find that. I was interviewing Nitin Kamath of Zerodha the other day. Zerodha today is one of the most successful unicorns in the marketplace. If you look at the idea, it's extremely simple. The execution has been so phenomenal, the business model that they've gone after, that they've become like market leaders in that space. So I think market size is important. It can't be too small. It need not be infinite. But at the same time, the power of your capability, and as I think one of you said, I think it was Sujendra, that you need a good team. I mean, this 4-member team is what is getting funded. So if you have a good team and you have, as Manit said, something that high integrity and passionate, you get funded. So market size is an important criteria, but it's only one criteria.
Right.
So I have one input here, maybe for the first timers who have never experienced these, who are never part of the ecosystem. So becoming part of ecosystem, knowing people into this space, knowing all these terminologies is important. So the first entrepreneurial journey can be into a niche market, actually, where you really try, learn the terminology, actually create 60-70% GP का product. तो जहाँ पे आप 60-70% एक तो वैल्यू क्रिएट करना ही मेन एंटरप्रेन्योरशिप है। तो आप अगर 60-70% वैल्यू क्रिएट करने वाला कोई स्टार्टअप कर चुके हो, भले आप 3 साल में उसको बेच दो या बाहर हो जाओ, एग्जिट हो जाओ, या प्रॉफिटेबल है, तो वो जर्नी आपको काफी हेल्प करेगा। इट इज नॉट ऑलवेज इंपॉर्टेंट कि आप फंड रेज करो, पैसा बनाते सीखना इज द प्राइमरी स्किल। उसको रेज करना, आप जब बनाते आता है तो उस आदमी की बहुत वैल्यू है मार्केट में, तो उसको पता है कि यार ये भले 100 करोड़ बना चुका है या 50 करोड़ की कंपनी बना चुका है, तो उसका बहुत वैल्यू है, उसके लिए 100 करोड़ रेस करना बहुत मुश्किल नहीं है इस अभी के जमाने में। तो जो लोग पहली बेट लेना चाहते हैं एज एन एंटरप्रेन्योर, दे कैन डू अ स्मॉलर काइंड ऑफ 100 करोड़ का टारगेट करें टेम भले, बट और उसमें वो 10 करोड़ की कंपनी बनाए। इट्स लाइक द फर्स्ट कंपनी दैट आई एक्चुअली आई वाज मेंटरिंग एंड इनिशियली वाज काइंड ऑफ अ फाउंडिंग मेंबर, देन आई बिकेम मेंटर। दे आर अ प्रॉफिटेबल कंपनी एंड दे वर ऑलवेज कि यार हम 100 करोड़ की कंपनी बनेंगे, 50 करोड़ का प्रॉफिट कमाएंगे साल का, एंड दे आर डूइंग इट। एक्चुअली उनके रेशियो सब ऐसे हैं नाउ, एक्चुअली बिकॉज उसके जो फाउंडर थे वो उन्होंने अपना बीकॉम ही कंप्लीट नहीं किया और कंपनी चालू कर ली। इट वाज वेरी टफ फॉर देम टू इनिशियली गेट द फंड्स, बट अब like in last 2 years they have rejected lot of term sheets saying we are investors now because they have huge cash in their banks now. तो इसलिए वो पहली बार में अगर आपको ये सब एक्सपोजर कम है तो यू कैन, मतलब हर बार वी कैन नॉट से कि हम टेम बहुत बड़ा करें, क्योंकि हर इट इज प्रोबेबिलिटी भी कम होती जाती है बड़े फंड्स को रेस करने की। तो इनिशियल जर्नी में आपका विश्वास एंटरप्रेन्योरशिप से नहीं उठ जाए, आप छोटा सा कुछ कर लें, मेक सम 5-10 करोड़ रुपीज, 2 करोड़ रुपीज, एंड दैट विल एक्चुअली इंक्रीज योर खुद का बिलीफ बहुत अच्छा हो जाता है, मार्केट का आपका नेटवर्किंग सब बहुत अच्छा हो जाता है, वो बहुत हेल्प करता है लार्ज टेम प्रोडक्ट्स को सॉल्व करने में।
Right. So, but is it safe to assume that because the difference between a VC fundable company versus a non-fundable company, like getting a large investor versus not non-large investor. Like say, if you want a Tiger Global to fund your company, right? Does it require a mandate that you need to be in a large market that's actually growing very well, or because I don't see any other companies that are like probably doing a small revenue but profitable actually getting those funding? What is the difference between a VC fundable company versus non-VC fundable? Because I think that's a clear distinction that we need to look at. Your definition of that, like how do you look at VC fundable company as such? Ganesh sir, I think it should be.
What do you mean by that? Any company, if it's reached a certain level, is VC. So it's not that it can't be funded. It's just a question of saying that, look, have you reached a certain, there is a classic jargon called product to market connect. If you have a product company, have you established the market connect? Are there enough credible people using your product? Which is, as I said, I've always felt that your first few customers should be really A-grade customers. Because if you say that, to take that other example, to say that, look, I have a great solution which is being used by Ganesh Cafe, nobody's interested. But I have a great solution which is being standardized by Hilton worldwide, then people will take you seriously because they assume the due diligence has been done. So I think everything is VC fundable. I don't see a problem. But you got to do all those stuff that I think you rightly said, Sujendu, that you really have to make sure that whatever the checklist is going to be, you're ticking most of the boxes. Otherwise they will listen to you and give you an American accent and then go away. Nothing is going to happen. So you have to be able to sell the idea to them.
All right. So I think also important, I think this is something that I have come across lots of times that, hey, the VCs look out companies that they can exit, okay, and exit becomes a very important point of all the companies that they invest in. So Mehta, you also, I think, spoke about, I think, Ganesh, you spoke about a company that was promising an exit within 3 years, right? So why is it so important that exit is for companies like? Why is an exit for an VC very important?
Yeah. You want me to answer that?
Yeah, Mehta, go ahead, please.
Yes. So essentially, if you look at the entire startup ecosystem, there are founders and there are investors. Now, the big differentiator between a founder and an investor in this whole space is that the founder is really passionate about the business, and he is trying to create something. He or she is trying to create something really unique, which he believes in. So he or she believes in. So essentially, it is the belief of the founder which is the start of the company. The company is there because the founder believes that there is a business which he or she can basically make out of the whole idea. And so that's one part of it. The other part of the story are investors. So investors, to a large extent, I would still say that there will be some exceptions where investors would participate in business making or whatever, but to a large extent are driven by financial results that they make out of their investments. And that is where their whole thesis comes into play. They basically look at a lot of investment opportunities and would decide which one to take forward where they can maximize their returns. Now, while everybody would speak about going to IPO, and in fact, when you look at an SHA or SSA, you will see a specific clause where they would essentially make you sign that you will take the company to IPO in X number of years. But at the back of it is the IRR they make on their money. So there is this only one metrics that they follow, which is the IRR they make on the money that they invest in, which can be either in the form of an IPO, but in Indian cases, it is majorly exits, not really IPO. Even the largest outcome till date, which is Flipkart, was an exit and not really an IPO. There are IPOs also that have happened, and I think the new breed of founders that we are seeing in the country are founders who essentially want to make IPO-able companies like we see in the Western world. So, however, whether it is through IPO or through an exit which they get from a strategic investor or from some financial investors, and these are stage of companies, the IRR really matters to them, and that is their driving factor. So that is why the exits or the outcomes are important for them. That is their core. They are into the business because they want to make IRR out of the money.
Right. So there are a couple of questions regarding the metrics specifically. What metrics are being chosen, and every time you raise, and we would probably want more specific answers related to your business. Again, Manit, probably start with you because you raised an early investment. You raised 2 rounds at different levels, right? So what were your metrics when you raised money then, and how much you were able to raise? Maybe you can be very candid and share, doesn't matter because we'll keep it closed. What were your numbers and revenue numbers and other things at each of the levels that you raised?
In terms of our first fundraise, while we did, it was $450,000 at that time. Our monthly run rate, that's typically close to around 3.2 crore rupees, which when we did it in 2017. At that time, our monthly run rate was close to around 25 lakh rupees. That was what we were doing at that time. And the last fundraise, while we did, so one of the most important things while we raise capital is always the revenue numbers, because that's always builds much more credibility than anything else, right? The Excel sheets and everything goes for a toss if your existing numbers are not that great. Right. While we did our $1 million round, we were at an annual run rate of close to around $3 million in total top line. That was close to around 20 crores of B2B sales, which we were doing. Right now, we are looking to raise, yet to hit the floor, but we want to raise close to around $5 to $6 million in our Series A. And we are anywhere in between close to around $7 to $8 million in terms of our top line right now as an annual run rate. Yeah.
All right, that's great. Similar numbers from you, Deepak. Anything that you can give insights specifically?
Actually, it is about broadly starting में तो idea ही होता है. So as Medha also mentioned, actually like on an idea, if he is getting $1 million term sheet, it is about idea and potential of it. So because initially you don't have a lot of numbers, but a belief on you and your potential of bringing together the initial team and initial product, etc. तो वहाँ पे it is more about belief on you and your team and setting up कि चलो करके देखो आप टाइप का ही होता है वो. तो उसके बाद yes numbers are important and broadly अगर e-commerce market है तो we see kind of depends until it is not kind of we are talking a lot, but the large VCs actually sometimes do a lot of multiple. But broadly if we talk about the Flipkart मोटा मोटा 30-35 हज़ार करोड़ कर रहा था तो 1.25 लाख करोड़ का वैल्यूएशन हो गया. तो 3-4 गुना का है मोटा मोटा नंबर ई-कॉम स्पेस में. Sometime because of FOMO, because of trends into the space, likes of Byju's or likes of what's like social commerce in India now happening, a lot of things are getting higher multiples. That depends on trend versus you actually and your numbers. So market is trending, investors का बहुत interest है space के अंदर, वो अलग factors हैं. Otherwise, it is like 2x, 3x of your top line, of yearly top line can be a broad valuation actually.
Right. So, Medha, the same question for you, but in a different line in a sense, what will be the metrics? Like, because you're seen raising early investment and raising now a series A, B, C, D, how does it differ? Like, yeah, we know a lot of story works in the initial days. How important are metrics in the recent rounds that you're looking at? And some probably more numbers अगर दोगे तो हमारे को अच्छा लगेगा.
I think the angel round and seed round is where pure play founding team and story and conviction in your abilities work the most. But beyond that, it is numbers a lot of times. And like Deepak said, plus FOMO. So it is your numbers plus the fear of missing out of the investors if the demand for your company is higher amongst the investor community. But broadly, I will give you some indicators how it works, especially in the e-commerce company, because that is what I know well. The other industries, I would not be able to comment that much. So in the e-commerce space, so if you look at public market, the multipliers are always in terms of EBITDA and not in terms of your revenues or volumes. However, since majority of the e-commerce in the country is not EBITDA positive, they take a multiplier on your revenues, on basically your GMV, if you are a marketplace, or your total sales or total revenue if you are not a marketplace or a 1P model. Now, assuming that they are taking the revenue multiplier, they would then take a factor of your, so there are 3 factors. One, revenue, second is your growth rate, and third is your addressable market again. So these are the three factors which come into play. And depending on how high you are on these, you can get a multiplier of anywhere between 2x to 5x. And also your path to profitability. So let's say there are 4 factors. So depending on all of these, you can actually at large scale, you get 1x also. So what is happening to Meesho now is 1.2x, and there are multiple others. Even at that range, you will see a 1x to 3x. And at a smaller range, at a mid range, you will see a 2x to 5x of your revenue. At an early stage, you can get 5x to 10x also.
Interesting. So good. That's a good insight into valuation. But I think it's again specific to industry. But the parameters I think will be same for almost everyone, right? Okay. So let's get maybe a bit more into technical again. Quick of like just before we technical parts of. Can one of you highlight quickly about what are the terms usually the investors come up with, or the term sheet on a high level? I think there will not be been thrown about liquidation preferences, anything that I would probably put in, but any important terms that you have to, as an as a entrepreneur, you have to look into when investors come in.
If I can just jump in with one word of caution, because one of our investee companies is just raising money from, I mean, not too much of money, they're raising 10 crores. Right. And I've been vetoing a lot of the terms that you mentioned. I mean, for instance, large investors are likely to ask for like a preference capital, which means that if they want to exit, they can drag along every other investor, including the promoters to sell. So you should be wary of clauses like that. Because I mean, obviously, if they have a 3-year lifetime or a 3-year cycle, they want to ensure that even if the company doesn't do well and they have to do a down round, that they can drag you along with them. So I think those are areas that you should be probably careful about. And I'm sure the rest of you can come up with, but this is top of my mind because I'm fighting this battle as we speak. So I'm just telling you that.
So basically the drag along right.
Yeah, investors will force you to do, and that you have to be extremely careful.
Absolutely. Anyone can help, because I think there are common words that we keep hearing: drag along right, the tag along rights, the liquidation preferences.
As an investor, I always ask for tag along because I want to tag along with the majority investor.
Obviously.
But I don't want to be dragged along. So keep that in mind.
I think LickPref, tag along, drag along, board seat, investor majority recognition, data rights, basically information rights. These are some of the major ones that we look at this. And you'll also have to look at non-compete and all of that.
Yeah, those are probably very obvious, but at least I think maybe I'll just highlight. Can you just quickly explain what that means to someone who probably doesn't know them? Okay, what would be a liquidation preference mean?
I think Dr. Ganesh would be able to explain a lot because
Ganesh sir, maybe 3 major terms: liquidation preference, drag along, and tag along. These are critical, important rights, I think. Can you just explain in a very simple words that everyone can understand?
No, the drag along, tag along is, I mean, as the name implies, for instance, and I'll give you the exact numbers from this transaction that I'm trying to maneuver. So these guys want to invest 26% in the company. There are already many investors, including me, who have maybe single digits, 7 to 8% in the company. And the promoters have 22% each. So if you look at it, there are 4 investors with 7-8%. These guys want to invest 26%. The promoters will have 22% each. So this guy is saying that, look, I'll give you a premium of valuation. So what is drag along? Drag along saying that, look, and they're a small VC fund, and they have a 4-year time span, maybe 3 years. So they're saying at the end of 4 years, whatever be the value of the company, if I decide to sell at that value, then I will drag all of you along. See, otherwise what happens, he only owns 26%. So the rest of the shareholders can veto it and say, right. So that is what drag along. And that's what's dangerous. That even a minority investor or a non-majority investor can drag you along to sell. And tag along, as I said, is an investor. Like we asked for tag along, saying that if we are taking like we just took a 5% stake in a company, where there is a big investor with 55%. So we said we'll tag along. That you can't go sell your share of 55% to somebody else. If you sell it, then we will have the right to tag along and also sell our 7%. So that's the tag along.
Right. And liquidation preferences, basically, they get first that money out, and there are 2 types of liquidation preferences.
That is something I hate, but it's
so just to give a brief for everyone who doesn't know that.
What you just said, that, for instance, suppose I've invested 25 crores in a company. Okay, and the company is being sold for 24 crores. If I have a liquidation preference, and maybe I only have 40%, but I can take my entire 25 crores first. Okay, and the other 60% will just have to wait for that. Same thing with preference shareholders. Our company has some preference shareholders, but we negotiated with the preference shareholders that, look, we will also be a preference shareholder. So that even if there is a preference shareholder exit, we will also participate in that. And then ordinary equity, where also we have ordinary equity and preference equity. So all these.
Right. So we'll come back.
You need to find a good finance professor in NITI to give this lecture.
Yeah. So for the benefit of everyone, that's the liquidation preference is something that you probably want to look into every time whenever you raise an investment, because what it says is that whenever an investor is investing a money, he would have first preference, at least a 1x liquidation preference. That's a common standard almost with all VCs, is that they get their money out. Like say if you are you're investing 25 crores for 25% and 100 crore is an exit. They get first 25 crores out. And then sometimes there's two types of preference, two types of liquidation preference also, a participating and non-participating. So if they have 25% participating in liquidation, the rest of the 75 crores, they still get about 25% of that if they hold 25% equity. So that's like overall, they would get about 37 CR out of the 100 CR exit that happens. Okay, so just wary of that. I think that's a high level what it means. It has a lot more, but that's a clause that almost exists in every VC investment that comes in. Yes. I think question here again, there are types of instruments that we keep hearing about, right? There are iSafe that people say, there are CCPS, compulsory convertible preference shares. And then there is a venture debt that's coming in. I think Meta, you can probably speak about, because you raised about 3 million venture debt, right? So what are these various, what are the typical instrument that most of the companies use today? Or is it like common stock equity share that you issue?
Yeah,
I think so. Sorry, before you go on that, actually, I would like to comment on the last one. Actually, the term sheet knowledge and the primary understanding of the terminology make a lot of confidence of a first investor actually. So if you are going for first time investment, if you know all of these terms, you will feel good. So once a term sheet come, if you do not negotiate, you do not say, hey, I don't like this. Hey, can you make changes here? He will like it actually. He will say, this guy understand the term sheet and terminology negotiation. This is also a litmus test for your next journey of fundraising, and his belief कि ये लड़के को आता है, ये कर लेगा आगे चल के ये सब मेरे लिए भी. Because you have to continuously do it. So this will help actually the knowledge of this.
Absolutely. Yeah.
Or have good advisors or mentors who can help you to navigate that.
Yes,
don't go like babe in the wood and get screwed by an investor. I think that's very
yes, sometime.
Yeah,
I think
we'll wrap up the instruments part and then we'll go back to the same questions. Yeah, instruments. What kind of instruments that we usually issue?
Yeah, so I'll come to the instruments. I think I just wanted to add a couple of important things on the drag along, tag along, and basically on the lick prep. So a number of early stage investors would want to ask for more than 1x lick prep that you should be worried about. You should never sign. So nobody does. In fact, lick prep itself is as bad as Dr. Ganesh said. So beyond that, no, anybody asking for 1.1x, 1.2x or 2x, just say no. It doesn't make sense. It drag along is actually meant where the company has no future. So don't sign on drag along without a condition mentioned that is really harsh, where basically the investors and the founders would collectively decide that there is no future of the company. So drag along they would put, but you need to be sure that you are signing with a very harsh condition where there is EOD coming into play for the company. Tag along, while investors will ask, it is always very smart of founders to also ask for tag along in basically reciprocity. So these are three things that I would want the founders to basically take care when they would sign a term sheet. Now coming to the instruments. So CCPS is the primary instrument to give preferential shares, which is the primary form of equity infusion into the company. Each investor would also want some very minimal amount of equity shares as well, because that gives them some financial rights which are over and above preferential shares. So that is the second instrument, but those will be very minor in numbers. Now on top of that, basically now that we are growing as an organization, we also have a lot of investments to do on infrastructure. So we get venture debt for that. So there are companies like Innoven, Altiria Capital, Trifacta, all of these into venture debt. And this is primarily getting into investing into your infrastructure. And then there are companies which also do working capital financing. So I mean, the 3 million was the last round. In fact, we have raised today a 10 million debt round also, so which is already in the bank, so I can speak about that. So it's a 13 million debt already we have taken, which is primarily going to the infrastructure development. And we are also in talks with a lot of financial institutions as well as banks now to get pure play ODs, which would get into my inventorization. So those are the primary forms of investments.
Sure, that's great. So basically, there's a question about iSafe also mentioned by Chintan. Chintan, basically, iSafe is nothing but either CCDs or CCPS, convertible debentures or convertible CCPS. So either one of them is iSafe. Just that the terms of iSafe is different. That's it. Except apart from that, doesn't make a difference. Yeah, I'm just checking the questions there. So let's jump into the question that I think one important question for each of you individually is that what were the things that you think worked in your favor when you were raising investment? Okay, what were things that worked in your favor? What were the metrics that played in favor of you when you raised investments? Maybe again, Manit, you could start with that. What were your parameters that investors were looking at in your company specifically?
I think three of us as co-founders with complementary skill sets was very important when we pitched our initial rounds. Also, traction was very important because it also establishes the product market fit and builds in the credibility of what we are doing. At the end of the day, you're raising capital to build much more skill into your product market fits. So I think that's where what I would say.
Sure.
Now, as I'm looking at, I think it also, I think what I understand is, and maybe Meda and Deepak can also suggest there, is our other core team members. So I'm very cognizant that our core team members are much more skilled from the industry because when we talk to new investors, I think that also matters a lot if they would be able to pull in the company from where it is today to the next 30-50x, which you want.
Right. And Deepak, from your side?
So I'll talk about maybe the first institutional investor that I got. So I used to wander around different events actually to get the funds initially. Not me, but one of my founders, because he do that job. So I was in Bangalore and attending one of the event, and I was also having one of my मैंने stall लगाया था वहाँ पे कि ये देखो मैं ये कर रहा हूँ type से. And this Incubate fund is a Japanese fund actually, and they are one of the largest seed fund from Japan. And this guy was visiting the stalls, and then I explained him, and there was a click actually, and that click is very important for the first timers. That basically he was working with a company who was getting it very difficult to enter into India as a market without e-com. So they wanted to enter into India, a cosmetics company actually from Japan and some of them from Korea. They have invested a lot of money, but were not able to enter into India general trade as a market after investing millions of dollars, like some of them 5 million or 20 million. That was the range they had invested, but were not able to make a penetration because there was no go-to-market channel available. It clicked him actually. So I believe in probability versus disbelief on my idea and my so lot of, because every investor have a thesis and have a problem in his mind, and if you can he can connect with it, you will find that one person. And yes, you need only one person initially or 2% to bet on you. So yes, you will find a lot of no's, but it is a sales pitch, and it is a sales pitch where you are. So जब हम sell करते हैं तो हम suppose हम मैगी बेच रहे हैं तो 5 रुपए की मैगी है, 5 रुपए लेना है. It is very easy. But when we are selling a hope, you are just having a hope for that person. So you are just selling a hope and getting cash immediately. तो उसके लिए आपको no बहुत ज़्यादा सुनना ही पड़ता है. But you have to wait for that one believer, and that is where you should continue doing it. So actually we and a lot of us, every one of us will go through no's, more no's than anywhere else in your life. But you just keep waiting for that 1 or 2% who believe and who know this is a problem and who is able to sync with the problem.
So Deepak, here, that was probably during the initial round, the first round, but what metrics played, what kind of parameters of your business played very well in your favor when you are raising the 10 million round?
Yes, sir. So whenever we raised the fund, we came into a room and we decided what is required for the next fundraise.
Okay.
So actually, because we were into a very large market and we always know that there is a consistent requirement of funds, but I can share some of my slides also. We make one single slide, said questions to be answered before next fundraise. And we make 10 pointers, 20 pointers, so sometime 8 or 5. So first round was kind of a $300,000 round, which is a kind of a first seed round. So we came into a room and started doing these 5-6 pointers before the next fundraise. So we should solve these things before we go to the next fundraise.
Okay.
And this always had some top line, obviously. That is one thing. Another thing is what product development, innovation, internal problem we will solve before we go to the next fundraise, because we know even the funds come, we will not be able to accelerate the growth. So are we ready internally also? And so 2-3 of them are for investor, 2-3 of them are for ourselves internally, that we also should have the capability to utilize fund when we actually go for when the next fund hits our account. And
Right.
that is approach. So 2-3 of them are like revenue, bottom line, number of customers. These are broader. Number of SKUs you are selling, how many brands you are able to contract in e-commerce. These are the primary. And then some of them are for us, like how our cost advantage increase, how our product retention increase, because and cohorts are very important. So cohort is one thing which is customer आके रुक रहा है या बार बार लाना पड़ रहा है उसको. और ये कोहोट इनिशियली बहुत जरूरी है, क्योंकि वो कस्टमर का एक बार चलो खर्च करके उसको ले आओगे आप, बट वो बार बार अगर लाना पड़ रहा है, फिर खर्च करना पड़ रहा है, तो वो एक्सपेंसिव हो जाता है इन्वेस्टर के लिए. तो अगर आपके कोहोर्ट्स ऑन रिटेंशन बहुत अच्छे हैं इनिशियल अडॉप्टर के, क्योंकि तब आप वही दिखा सकते हो. आपके पास 150 कस्टमर होते हैं, तब आप उनको दिखा के फंड रेज करते हैं. आप बोलते हैं यार रिटेंशन बहुत अच्छा है, मैं बार बार इन्वेस्ट नहीं कर रहा हूँ, तो भी ये ग्राहक आ रहा है, व्हिच मींस आई हैव अ ग्रेट प्रोडक्ट. एंड दिस कोहोर्ट मेट्राइज आप डे 0 पे डिसाइड कर लो कि मैं 100 कस्टमर को ट्रैक करूंगा, 1000 को करूंगा, 10,000 को करूंगा. बट वो 1000 को आप छोड़ो मत, और आपकी भी नजर होनी चाहिए कि यार बार बार इन्वेस्ट तो नहीं करना पड़ रहा है. अगर करना पड़ रहा है तो फिर आपका प्रोडक्ट ही सही नहीं है.
Okay, so Mendel, same question to you again, specifically with what worked in your favor, specifically again in your context, in general, what worked very well for every series round that you raised, actually?
Yes. I think in order of priority, it is obviously the growth of the business. Once you have sold your idea in your initial rounds, I think beyond that, it is first the growth of the business. There is nothing more important than that. Second, basically the capital efficiency. So in startup terms, especially in the e-commerce industry, there is something called GMV run rate by capital deployed into the business. So that capital efficiency factor has to be really high. We, like in e-commerce space, we say that we are at 10x, and then Flipkart was at 3x, and BigBasket was at 1.5x. So that is very important as an attractive parameter. Third is essentially the path to profitability, whether with each passing month and growing business, are you becoming better and better on EBITDA and other contribution margins? And then fourth is the kind of talent that you have been able to attract with your idea into the organization. Are you making a formidable organization with really good talent getting attracted to the organization? Fifth is obviously other parameters like long-term retention or cohorts that Deepak spoke about. And then there are multiple other factors, virality of the business. So all the theses that you have spoken in your initial pitch, whether all those theses are holding true. So that's the next one.
So I think in your case, specifically the growth rate, because you said about 100 crore revenue that you touched upon, that probably within 3 years of starting up, right? Would that be a critical factor that played in your favor?
So in our favor, I think it is, so like I said, it is growth plus capital efficiency plus a very talented team and a differentiated business.
Okay, absolutely. So Ganesh sir, I think this question is something that you would probably want to answer very well. There's a question by Sachin Doshi. The question reads as follows: like, my company does not need funding at this stage, and it's profitable, and we have a bill discount sorted without any upper limit and without stake dilution. What should be the thought process for dilute stake and make personal win, if this particularly is the scenario? And probably also touch upon the point and how important is being EBITDA profitable, EBITDA positive for fundable companies, because we've seen all three companies not being EBITDA positive as well.
Okay, that's a complex one, but I mean, Sachin and I, by the way, have been exchanging multiple chats already for the last half an hour. So he and I have a separate discussion. So I can take money from him and get him money. So that he doesn't know yet. So so Sachin's question I won't answer because he's obviously running a very successful 200 crore company, very profitable, but he wants to take his profits 10x like we did in Zensar.
Right.
So that because today I think we're talking more entrepreneurs. So your second question, sorry, what is the question again? The second one?
The second question is like, how important is being EBITDA profitable?
Okay. See, I mean, it's a very difficult question to answer because it depends on the stage of your business and the industry you're in. For instance, if you're in the services industry, like we are in GTT, I mean, GTT, if I don't show superb EBITDA positive, they are not going to fund me next time. Okay, so the second round funding we got was purely because we built a really successful 40% EBITDA business, and even today that sustains. Okay,
right.
If you're an OYO rooms, if you're something else, then people are looking at, I think, as Surendra rightly said, they're looking at what is the growth of your revenues. So revenue growth sometimes is much more important, especially when you are looking at opportunity share and not market share, because it's like gold rush. With a new opportunity that opens up, you better put as much money to work as possible to get it moving. Look at Byju's here. I mean, Byju's, if somebody came to me when I was starting Global Talent Track or Aptech and said, Byju kharidoge kya? I said, yeah, maybe I'll give 50 crores. I mean, here is this company, $16 billion and just climbing, because he's like got huge money working and just dominating the market space. So it's an amazing marketing story. And the product is good. Nothing wrong with the product either. But I mean, if you talk to any of our big fund managers who have been used to investing in Infosys, etc., they'll say, kya pagal company hai yaar, kyun public paise laga rahi hai? There's a different category of investor which invests in each of these. So I wouldn't be able to categorize that much. But just a comment I had on why people fund what. Like, I mean, when Uma and I raised for Global Talent Track, we did it on the strength of our reputation. But she had built NIIT and ZTV's education business. I had built Aptech and Zensar. People are willing to fund anything that we came up with. So that was easy. But recently, I mean, the entity we are currently raising funding for, two entities actually. One is this Chennai company, as I said. We're a robotics education company, and we are doing it purely on the strength of the IP. So the IP is great, it's defensible, then people will fund you. The other company is more of a traditional e-learning kind of company. So there we're just doing convertible debt as an instrument. Just saying that, look, today the company is about 12 crores revenue. We're saying it will definitely be 50 crore value 4 years from now. So you give us X amount of money. We will not value the company today, but it will be convertible debt. So we're raising 6 crores. And every year we'll give you X% as interest on your debt. End of 4 years, convert your entire money at 50 crores valuation. So if the company's valuation is much higher than 50 crores, good for you. If the company's value is less than 50 crores, bad for you. But you're taking a risk and you're getting interest back. So you'll have to be, you'll have to think about what kind of fundraising options are you looking at. I mean, I was very, very interested to understand that you're raising debt, because normally venture debt is not a very fashionable instrument. I'm helping Loomis Partners to actually create the venture debt story. And we're finding much more people are interested in equity than venture debt. Whereas if you're a smart investor, you'll realize that venture debt or convertible debt is actually maybe a better way than giving away too much equity early on in the day. See, when you're an entrepreneur, you think, "Arey yaar, isme 2 crore mil jayega, to main isko 60% de deta." But maybe that 60% is actually worth 20 crores if you had waited for 1 year. Okay, so you have to be. That's why I said you need advisors or a board which will actually help you in choosing the right instrument, choosing the right timing, choosing the right pitch, choosing the right reasons why somebody will fund you. I think that's going to be.
There's another question from Ravikant Minchu, and it's, I think, most common question always as well, is how important is to have connects into the VC industry to get a VC funding? Importance of connects, or probably importance of warm introductions at least.
It's very important. Yep, I think everyone will sync with that.
Yeah, but like how, so if you say very important, how you probably need to give an example specifically, because otherwise that we definitely know that network always helps you. But what kind of introductions, what kind of connections you need?
Oh, so personally, for a larger, so initially friends and family, yes, you raise because you know them, they know you, etc. But in VC world also the similar stories goes actually. So because that comfort with founder has to be built. Yes, it is very important actually. So hence second time founders and entrepreneurs in India are having a better success stories initially, at least for the fundraise. I'm not saying like second time also they are successful, but at least for fundraise it is much easy journey for most of them, and that all of us are witnessing. And hence that repo actually, not the connection, the repo among the investor of the founding team and is needs to be built. Hence, it is about hence two things. One is, can you make money out of the business, and at the same time, do the founding team has the capacity to sell the idea and raise the fund? And when sell the idea is about building their own repo among these people who are investors.
And that question, like say, I would probably put it in a different way. The question, yeah, you'll definitely need a rapport with the investor, and getting an introduction is important. But would an investor fund you because they know you for some time, or would they invest because your business is right? So how important is a personal connection with an investor versus the growth of a business or whatever you're pitching in? That is
personal connection with the investor will only be if that investor is your father-in-law and my
right.
father.
तो इसके लिए एक इंटरेस्टिंग मतलब मेरा ऑब्जर्वेशन है वो ये है कि व्हाट इज अ वीसी वीसी इज जस्ट कनेक्टिंग द डॉट बिटवीन अ सक्सेसफुल एंटरप्रेन्योर एंड एन इमर्जिंग एंटरप्रेन्योर. So VC is just a kind of a mediator.
Right.
So most of the time he is funded by a successful entrepreneur already. So he is whose LP is. तो जो भी फंड रेज कर रहा है उसको ये LP समझना पड़ेगा कि आपके बिजनेस में को जो फंड कर रहा है ना वो VC एक मीडिएटर है. एक्चुअली फंड तो वापस एक एंटरप्रेन्योर ही कर रहा है पीछे, बट उसके पास टाइम है नहीं, इसलिए वो इसको पैसे देता है, यार तू ले 2000 करोड़ रुपए, मेरे को इस स्पेस में 2-4 कंपनियां पहले से चाहिए ताकि मैं जब इधर आऊं तो मुझे तैयार चाहिए मामला. तो एक्चुअली ये अप्रोच आपको समझना पड़ेगा. मोस्ट ऑफ द टाइम वीसी हैव अ थीसिस एंड थीसिस इज बिल्ड बाय द एंटरप्रेन्योर हु इज मेकिंग फ्रॉम द बैक एंड. तो वो पीछे वाला एंटरप्रेन्योर जो चाहता है वो ये वीसी करेगा एक्चुअली, और करेगा का मतलब थीसिस बनाएगा उसके अराउंड कि यार अब सपोज टेक एन एग्जांपल कि सिक्वोया है, पैसे कहाँ से लाता है, जहां से लाता है उसका जो थीसिस है उसके अराउंड ही वो इन्वेस्ट करेगा, भले आपका आइडिया कितना अच्छा हो. अब उसको आपने पिच करा और अगर उसकी थीसिस नहीं बैठी तो आपका आइडिया गलत नहीं है, क्योंकि उसके पीछे जो एंटरप्रेन्योर उसको नहीं चाहिए अभी ये वाला जो आप कर रहे हो, बट किसी और को चाहिए. सो एवरी इन्वेस्टर थीसिस व्हिच इज अगेन बेक्ड बाय एन एंटरप्रेन्योर and hence story will revolve around it actually. So repo will get you to them, repo will help you understand their thesis, your thesis, get that connect, make better comfort, but वो thesis के बाहर जाके बहुत ज्यादा invest बहुत कम करेगा actually.
Okay. Mehta, I see you smiling. I think you have some comments to add.
Yeah, I think connect is extremely important to get you inroads into the seed round and series A round. Like in our case, we were fortunate to have both the Cardeco founders and the Bluestone founders as our close friends, and so that helped us get into the network of VCs really fast, much faster than others, and at least some help. Obviously, we need to be strong and our business needs to be strong, but we save on time by having those connects. Beyond Series A, connect doesn't matter. So Series beyond is all about business and the team. So to that extent, connect is really important. The initial part, the first 2 rounds is where you really need connect, and the better the connect is, it is more helpful.
Right.
For us, Paresh, for both the small rounds which we have done, we didn't have any connect actually. So everything was organic. We reached out to so many other people on LinkedIn and cold mails, and all the conversions have happened from those itself. Also participating in competitions, and as Deepak did mention that he was Shop Kirana got visible with some of the Japanese fund also in one of the conference. So for us also, we got fortunate to be part of a conference in US, and we got one of our impact fund to invest us from there. So I think that also helps. But I think hopefully as we grow from here to Series A, I'll take Mehta's guidance or his advice there.
Sure, absolutely. So one other thing, maybe also an important factor is how important is a warm introduction, basically, because well, at least in the early stages, right? So how important is that?
See, I think it is very important to basically. So how it works is essentially like Deepak was saying, that a second-time founder always gets funded faster than a first-time founder, because it is basically the trust the investor has that this guy has done something, made some exits for the investors, So whatever he says has more. So it's just in the mind of the investor that whatever he's saying has more truth than maybe the other guy, and that is how it works. So somebody who knows the investors well has given them some exits or run some successful company or is running a successful company. His word will always be valued a little more than you going cold. Now, I'm not saying that you going cold. Obviously there are brilliant founders across the world who have never gone through any connect and have created multi-billion-dollar organizations. So you can be Mark Zuckerberg and you can be anybody else, but ultimately your probability to hit an investor will increase if you're going through somebody who can make a warm introduction about you as your friend and basically say that this guy will also create a good organization. I take that upon me as basically a bet. So that helps.
Absolutely, sure, thanks. So I think I got some other inputs earlier on this. There's a thought that was thrown upon me that saying, hey, as much as you as an entrepreneur who are trying to raise money, VCs are also under the pressure to find out best of the startups and where they need to fund. So they have equal pressure to actually find good deals. So it's like, it's always a win-win both the sides. It's not that only that you have to find. They will also be looking forward to best of the companies that are coming. All you have to do is put up your face across everywhere, wherever you're going, and keep showing up your metrics right. Any thoughts on that specifically? Because how important is that? How important is a PR and promotion and branding there to fall into the eyes of a VC? Anyone? I think
it depends. It depends on what you're doing here. I mean, if you're in a B2C space like Byju's or Oyo Rooms or anybody, then PR branding is very important. But if you're doing, I mean, today most of the funding we are doing, at least through our two angel groups, are B2B SaaS. And B2B SaaS doesn't need PR and branding. It just needs a solid defensible. Like even the company that we are now massively investing in, we've invested close to 10 crores. Is a company called Skills Alpha. And Skills Alpha is a pure AI-based automated learning product for employees of companies. So they branding, we're not doing B2C, it's B2B2C. So the minute you do that, I mean, people are not looking for that. They're now looking at what is the traction, who are the kind of customers that you're doing this work for. So the minute we say, okay, we've done it for ITC, we're doing it for the Birla Group, there's automatic interest, as I said earlier, because of validation. So PR itself, to my mind, is not that important. But if you're in the consumer space, absolutely. Why is Virat Kohli going around with Byju's on his thing? Because they need PR. If you're not in B2C, you don't need PR.
Sure, absolutely. So I think there are a couple of questions regarding venture debt and more technicalities of that. Can you probably help us understand that? Basically, how does a venture debt work? And either a CCD or a thing, how does it work usually? Like you mentioned about like it gets converted at 50-share valuation some point of time.
Let me throw this question to Mr. Mehta first, because he's raised debt, so he must have done the valuation. So he'll give you a real example, then I'll add anything that's fair.
Sure, sir, absolutely.
Yeah. So typically in the country and unfortunately for the country, I mean venture debt ideally should be a venture debt, but in the country, most of the leading institutions, which are the three names that I talked about, and there are multiple other such names, they link venture debt round to an equity round. So they would want to have the comfort of an equity round to basically give you venture debt. But then there are other ways also. So it is not the only way, but the primary way venture debt is in the startup ecosystem is basically one equity round and then followed by multiple venture debt round or single venture debt round you can do. They basically do a portion of the a percentage of the equity round, which is basis their own calculation. They would give you an interest rate of anywhere between 13 to 15%. It depends on your negotiation. And essentially, they would take charge on all the assets that the company have, and there is no calculation as to what portion of the assets will be on charge. But however, there is always a clause that if there is at all a default, they will basically recover only to the portion of their outstanding amount. So all that is basically worded well in terms of the law of the land. And on top of that, typically this also takes some CCPS, which is very small. And so let's say somebody would be giving you a 70 crore venture debt. So they would take a 10% of that, let's say 7 crores of CCPS. at the equity round valuation, which they would not take immediately, but they will say that there is something called an RTS, which is right to subscribe. So it will be basically partially paid up at the time of venture debt issuance, but they would take 8 years or so time till the time they will have the right to subscribe. Now, these are the most common features of basically any venture debt term sheet or agreement that you would sign. Then there are certain other parameters called RTI, which is right to invest, which is basically some of the VDs will basically ask for a right to invest into the next round and so on. All that you can debate and just do away with.
Ganesh sir, over to you.
I think you heard it. And I gave you that other example of more of a convertible debt. And the convertible debt is what I just said. You give whatever is a reasonable return. The reasonable return is above your normal bank rate. So let's say you give a 10% per year return for 3-4 years, and then you peg a reasonable valuation where there is some appreciation for that. But don't forget that he's going to get 4 years of interest. At the end of it, you're converting the original capital into a reasonable valuation. So it seems to work for most people, but people who are really interested in punting on the equity play will want to get a low valuation equity do right now. So it's a tug of war between what you think your company is worth and what somebody else's company is worth, and what you think your company can be worth in future vis-a-vis. So I think that's what you're looking at.
Sure. I think I'll probably want to highlight the point that so both the things are different actually. What Ganesh sir is speaking about is a convertible debenture, which gets converted. And the venture debt is basically specifically comes only for VC funded companies. It actually doesn't come for you just can't go and raise as a debt from the company. It only comes for a VC funded company. They invest part of that as a debt so that they get converted to equity at the next round.
In theory, it should not be like that, but as Surjendu is becoming like that. Like, I mean, even in two of the equities I'm participating in, it's a combination of equity and debt. But in theory, venture debt can be a standalone instrument completely.
Yes.
So just for the sake of audience, do not confuse with both the things, because that's a different venture debt versus CCDs. And the safe instruments that you speak about, right? Usually this iSafe or safe instruments, and technically the instrument can be a CCD or a CCPS, doesn't matter. At the end, what you see is the terms in which it get converted to a normal equity. Okay, converted to equity that actually is defined by the terms that you design. So like Ganesh sir said, it could be 10% interest rate that is given out and it converts to an equity at some later point of time. Right. So I think that's the technical part of it. Like again, one important question as well. I think it's specifically for, we come across as an entrepreneur, you are bombarded with a lot of people who come and say that, hey, we will help you raise funds. They typically name themselves as investment bankers. How important are investment bankers? At what stages, what kind of investment bankers come in? Versus what are these people who come and help you say, I'll take 2% of your cut and help you raise money? Some insights onto that. Maybe more professional investment bankers, you can speak about that meta, but others, can you help on understanding what you should do when someone says, I will help you raise money, give me 2% of that?
Yeah, my only advice would be don't give the 2% as advance or something like that. A lot of people say, you give me this as a retainer and then I'll raise money. Don't ever believe those brokers. If at all you are desperate and you don't have this thing, and there are some credible people who can raise money for you, and they'll raise it mainly from HNIs or family funds. So if somebody has a inroad into the Kotak Mahindra fund or the Atul Nishar fund, and he's able to get you 10 crores and you are okay to give him 2%, nothing wrong with that. But as I said, don't give it as a retainer.
Right. Okay.
Right.
Even for acquisitions, I've done like 11, 12 acquisitions in my life. We have never paid a search fee or a retainer. We've just appointed 3 investment bankers and say, boss, any deal you bring us, we promise you it will be exclusive to you. But if we do the deal, we'll give you 2.2%. So that's how we always work. So nowadays, there's no market for retained searches.
Right. Mani, did you come across people who reached out to you asking for commissions for specifically as an investment banker?
They did, and many of them actually look for retainers as well. But for both of our rounds, we have organically done that, cold mails on the floor of conferences and LinkedIn's, honestly. So So, and then the networks have actually helped. So one of our investors was an investor, was an advisor to AngelList, and he put us across AngelList there, and that's all comes. But we have never done something with a banker. Like the decks and financial model also, between me and Sanchit, we have our own proficiencies, and we share the work to make it. So nothing, but I would be glad to hear more about it from Deepak.
Sure. Anyone, Deepak?
Yes, yes, so not in this company, but another company which I mentor. Yes, there. So and very renowned name actually in Indian kind of entrepreneurship and ecosystem, and and then I found he used to do it with a lot of people, and it is kind of lot of people in this space who are very active on the LinkedIn, etc., and try to attract the initial entrepreneurs and get them into this trap actually who don't know the industry actually. So as Ganesh mentioned, never do the pre actually. Everything is post. And but these guys like I am this, I have done this, and he will tell you 10 things I have done, because you sometimes cannot do cross checks, etc. And you are in hurry, and he will make you feel hurry also. And he said 3 people are already in line, I have talked to them, आप मेरे को अपना deck भेजो, ये करो, फटाफट करो ये सब. So he will make you feel कि यार everything is in hurry, सब कुछ ready है, बस मेरे को इसको agreement करना है. But yes, yeah, I have seen that happening, but I think not after certain scale, because then everyone knows everyone.
All right. So, Meta, what is the role of investment banker specifically in a larger deal rounds?
Yeah, I think if one can stay away from IBs in the initial rounds, it is better. So all of the 35 million that we had raised till now was without any support from any investment banker, and so we were fortunate to get inbound interest and also support from internal investors. So it's always good. I mean, it also depends on the situation that you are in, but it's best that you don't get an IB. Why should you part away with 2% or odd of your investment amount? But in the larger rounds, they actually start playing a very important role, because see, it is like so a very crude example which I keep on giving is that when you have to sell houses, you have to have those brokers even if you don't like them. So essentially, the brokers in the ecosystem have really a very important play, and we keep on blaming them. But if you believe me, if you don't have brokers in the real estate deals, the number of deals will go down. Similarly, investment bankers are extremely trained well to have the network of investors and also do the storytelling in the manner it is required for large round. When I say large rounds, it is like a 50 million plus round. And also they do a lot of your term sheet to final investment work really fast. They're adept at it, and you will see that whatever took you 10 days, they will do it in 1 day, and you save a lot of time and concentrate on business. So that and specifically, so we have Aventus as our IB for this current one that is going on, and they are the leading name in the country. I think beyond the point where your investment amounts are going high, Aventus does the best work in the country, and there are others like also the Rainmaker Group and so on. You will find a bunch of them, but most reputed investments are happen through Aventus after a large amount.
All right. There's a question by Rohit Tripathi. Can Manit explain about the utility of AngelList? Basically, how is the AngelList network? Because that's something that we always look up to. How has it been helpful for you over the last?
So AngelList is typically a crowdfunding kind of platform where if you have a lead angel, he will go there, he will pitch in your deal, and then there would be a lot of other small angel investors which can pitch in 2 lakhs to 5 lakhs, rich people like Meda and Deepak and Ganesh sir here. So they can eventually pitch 2 lakhs, 3 lakhs, 5 lakhs order money in that, and eventually you can close that round. So for us, that finding that lead angel was very important. We found that as Amit Ranjan, he co-founded SlideShare. He knew Naval as well, and got us introduced to AngelList, and he led our round at AngelList. And so they were part of our 1.1 million round which we raised. But I think the key there is to find a lead angel.
Sure, absolutely. And anyone who is looking forward to raising an angel investment, I think you would need to ask Manit for a warm introduction to Naval or both of them actually. So that will actually help you a lot, definitely, because that kind of introduction is important for AngelList to come in. You need an lead angel investor there. All right. I think I'm just going to the questions quickly. If I missed anything, no, this is okay. Contracts recovered, safe instruments. So Ganesh sir, I think this is a question that you could probably answer, help me understand. So there are a lot of, I think to an extent, Sachin had similar question, but if someone as an entrepreneur would want to bootstrap, what would be your advice for them? And should everyone go and look out for raising money, or someone doesn't want to raise money? What is the condition? What should be the parameters he should think about?
I really can't think of any reason why you would not raise money. I mean, to be very honest, okay, it's very fashionable to say no, I'll manage on my own. But I mean, the days are over when you could start a company, धीरे धीरे चलाओ, उसको बढ़ाओ, next 20 years में कुछ करो. Yeah, life is too short, man. You got to do other stuff. Okay, so I'm just saying that, I would, but again, I may be in the mindset, but I'm just saying I don't think there is any business, and of course, and if you have tons of money, why would you? The best way to grow companies is what they call opium, other people's money. So
Right.
grow a company with your own money, to my mind, is a waste of your money. You should invest that money in some other e-commerce venture, and you raise money for your venture.
Sure.
Because
So,
we are looking at it. Don't try and grow companies. I mean, maybe initially, nobody's going to give you money anyway. So, 1-2 saal to khatna padega, then you'll have to put some money in. Like I said, Skills Alpha, we put 4 crores of our own money in, and now we are raising money. So sometimes when you're excited about an idea, the idea sometimes is before its time. I remember I first talked to 2 people about it, and they said, boss, this is a total category leader, but it's before its time. So before its time also, nobody will give you money. You got to demonstrate with 4 clients that it actually works in clients, then they start getting very interested. So in such cases, yes. But don't put your own money in because you're lazy to go and ask people for money. Or as Survendra rightly said, I mean, why has he got Aventus? Because they can put a very professional show to make it happen. I mean, why did we appoint Morgan Stanley when we did a London Stock Exchange listing? Because those guys know how to position your story, how to get you in front of the right investors, etc. But I am always in favor of getting investment as and when needed and as quickly as possible.
So I would like to hear from others in the panel as well. Like, did you ever feel that, hey, I should not have done this fundraise? Okay, making it closed door again. We'll not put it outside. But just a thought that you always was there a dual thought at any point of time? Was it all good? Or
see, one thing is our investors might be listening this, so we cannot say that.
Okay. But or maybe in general, any reason why someone shouldn't raise fund?
Can I answer a strong reason why somebody shouldn't raise a fund? See, when an entrepreneur is not sure about what he's doing. And I've had this conversation with one of I put 10 lakhs early on in a company. And then the guy came and said, sir, I need you to help me to raise 3 crores of angel investor. I said, why do you need to raise it? He said, no, we want to expand the model, etc. I said, look, this expansion model, you're talking about what Aptech did in the 90s. It may not work in today's time because it's very electronic. Everybody is doing it. And plus those COVID times, etc. Then he says, I will raise the money on the basis of this. Magar wo jamega nahi to I'll change my model. Now, this is ridiculous, okay? Because you don't raise money and 6 months later you tell the investor, sorry, it didn't work. They said, no, but I thought pivot was fashionable. I said, boss, pivot was fashionable. That doesn't mean that you make a fool of your investor. That's not why pivots are created, So those are wrong reasons to raise money. So I think you should not raise money if you don't have a business model that even you are comfortable. Forget about the investor. आपको खुद को भरोसा नहीं है अपने model में, then don't go and raise other people's money because you'll make a fool of yourself and you'll get a bad reputation in the market. These guys are not to be trusted.
Right.
But there is one more reason that I have seen, like when I have been to US and Europe, a lot of entrepreneurs there actually do not raise because they want they would do it for their passion, and also they want a certain lifestyle out of it actually, and they feel this is what I want in my life. So and if that is your personality type, yes, you should not fall into this sometime. So yes, some of my friends also, they make good money, they have good life, and they say इतना ही चाहिए यार अपने को, and I can withdraw जितना मुझे withdraw करना होता है, मैं साल का 50 लाख 2 लाख 2 करोड़ withdraw कर लेता हूँ, मेरी लाइफस्टाइल है और मेरा पैशन ही ये है, मैं ये करता हूँ, पैसा कमा लेता हूँ. और अगर उस टाइप का entrepreneurship है, पैशन भी है, थोड़ा बड़ा भी कर लिया है, but yes, and in Europe, US also there are a lot of entrepreneurs who are like this actually.
In fact, Europe, Deepak, is a completely valid point. In fact, I know at least 3 NITI alumni in the US today who are running lifestyle companies. 20 million ka company hai. I mean, they are taking out maybe 2 million every year from the company.
Right.
Pays investor money. Because investor will ask 5,000 questions. Ki ye paisa kyun nikal rahe? And doing stuff they shouldn't be doing. वो अलग बात है.
So if anyone of you thinking
Europe, absolutely. Europe has this, like
Yes.
we have this fashionable word called pivot. In Germany, they have this fashionable word called Mittelstand. Mittelstand is a company which is a chotu company which never wants to become big. I remember buying a German company and we said, why don't you grow from 10 million euro to 100 million? He says, are you mad? Why would I do that? I mean, I never grow beyond 15 million. Never want to employ more than 30 people, So there are different lifestyles that people look at. That's true. That's the point, Deepak. Thanks.
I feel that India, maybe there are a lot of good bootstrapped companies. Like you see Wingify, Zerodha, and all of them have proven it for the course of time. So I think it's not always necessary to raise capital. I think the people who raise capital have less confidence in their own ideas.
And that is too extreme, Manit.
No, yeah, that is less. Actually, it is about what the market and lot of things actually, and a founding team. Some founders are like, for lifestyle, they do it and they find it ki yahan tak theek hai, I am comfortable and I don't want to fall into all of that. So it's always good actually, because you are doing it for yourself finally. Net. आपको किस type का aura चाहिए, किस type का day-to-day problem चाहिए.
Right. So sure, I think we are almost 2 hours into the session, all 10 minutes, 9 minutes exactly to be precise left. I think there's one question that is important as well. Sumit from 5 Elements asked this question. Have you raised money from via SME IPO route or from BSE, NSE? I think Ganesh, sir, you were running a listed company. Would you want to touch upon this part? Basically, how does a public listed company versus VC route?
No. Let me answer the question you asked. What he's asking is, should you raise it on the SME stock exchange?
Yes, absolutely. Yes.
My honest answer is don't. Okay, because SME stock exchange mein liquidity bahut kam hai. You are faced with almost all the same listing rules as you are in the large stock exchange. So unless you have a strong ego reason to be on the SME stock exchange, I would advise against. But I am actually advisor to a client who had actually raised money. Koi fayda nahi. There's no liquidity. Okay. So, but to answer your question, I mean, if you're a good company and you can meet the QSQT syndrome, quarter se quarter tak reporting. Okay, don't forget that getting investors into your company is like riding a tiger, as Mr. Ramalingam found in Satyam. Okay, it's not easy. But once you're comfortable with your model, you can take it forward. Then, I mean, I've run public limited companies for 25 years. But I know what it takes here. I mean, to answer stupid questions from CNBC, sab piche pad jayenge. And you're spending the first 20 days of the quarter answering questions to the press. And then you're working for 2 months. And then you're spending the last 10 days of the quarter just trying to figure out, press ko kya bolenge, analyst ko kya bolenge. If you want a free life, stay away from investors. Definitely stay away from the stock exchange. But at some time, you will have to get into it. So you don't have a choice.
No, one more thing that I have observed is this is the space with highest mediators and the wrong people kind of trying to make you there. So actually you do a 10, 20, 30, 40 crore, 100 crore good company. They come and say, sir, आपको IPO करवा देंगे, and it entrepreneurs excitement. यहीं पे सबसे ज़्यादा mediator मैंने personally देखे हैं actually, जो wrong path पे ले जाते हैं.
Yeah. So, sir, I think Meta, you were also having some comments on this. I see you again with that sarcastic smile when sir was answering.
I was enjoying the discussion.
Okay.
So, I think the SME route, I think Ganesh and Deepak put it very well.
Right.
It is not the right route for small companies. I think the other one which Maneet had pointed out on whether one should raise or not, and whether it is lack of confidence on the organization and all of that. I think my personal view is it is about the journey that you want to take. So if you want and you're confident that, so basically you have to.
Yeah. Go ahead. You went on mute now.
No, he went on mute now. Hello.
Yeah.
You're on mute, boss. Somebody has to unmute him, Parsi.
Yeah, got it. So I was saying that essentially it is the calculation of your journey which should lead to the amount of capital that you want to raise. It is just as simple as this. And then you raise that. and you continue with your journey. You have to decide your own journey. That's it.
All right. I think we are just 5 minutes left. There's a question by Rohit specifically asking, what about the 100 million fundraise from Tiger Global that we've been hearing about, Meda?
So when you are learning about fundraise, there is something called a silence period.
Sure, I think.
So
So
all
with
of
that,
us should appreciate the fact that it is, I think, one of the highest fundraise ever done by any NITI alumni, maybe.
Hey, Talia.
Absolutely. And
so
yes, sure.
it will bring actually the entire NITI alumni into a next kind of level of entrepreneurship and bring a lot of kind of learnings from this to our journey of being together in building this up as an alumnus. But yes, great job, Mid. I would really appreciate the way it has happened.
Thanks a lot.
So I think we are ending the time. Probably we'll just do the final round of thanks. I would like to thank all of you. It's been a really wonderful session. There's a lot of questions specifically answered, right from technicalities of it and specifically your points on. I think thanks for everyone being very candid and sharing those numbers as well. Maneet, I specifically like that because that gives us a sense of where we are looking forward. So thank you, Ganesh sir, for being always supportive for all the NITI entrepreneurs. I think that's been, I remember one day with me and Maneet were on the dais and you were the moderator today. I'm pretty appreciate that I got an privilege to be here. So thank you very much, sir, for that. Thank you, Meda, for taking time out to come here and help us with that. Because it's actually that your 100 million fundraise, whenever that happens after the silence period, that puts up a benchmark for all of us. That becomes an inspiration for all of us to aim the next big thing, right? And I think that's very important. We will all look forward to for that. Somewhere we would also want to strive that. Everyone wants that always. So you become an inspiration for all of us. Thank you very much. Thanks, Deepak. I have one question I have always had, but I think there's a lot of time. I really remember one thing is you started from Indore specifically and that was a question that I asked, like, hey, it's not the location that's important to start with, and you probably focused on the market that was existing there, right? And I think that's a very interesting thing. I always wanted to ask, why is it, how location plays an important role for you? I think, Meda, you also started from Jaipur, right? Whereas everyone is passionate to start in Bangalore, Gurgaon thing. So Deepak, thank you for once again for coming here, helping us with all your questions. And Maneet, thanks very much. We'll always be in touch. I think I know you very well. Thank you very much. And our superstar, one is Mandi sir. We would want to quickly see you, hear you, and Rohit Bhaiya. Rohit is here, yeah. Mandi sir, quick words.
Yeah. Am I muted or unmuted?
Yeah, unmuted. Yeah, we can hear you.
Hello?
Yes, sir.
Yeah,
we can hear
thank
you
very
Professor.
much. Yeah, thank you very much. It's a pleasure to, see such wonderful presentation. And it's a great learning for me. There are 2 points which I was trying to mention. One is that, what is the next webinar when we are going to have? What is that? That is one thing for Paresh Masade. Number 2 is that we need small investments apart from incubation center entity. Basically, we have planned to develop an incubation center. There will be a lot of Sarkari kind of things will be there. We would like to have a very, very small investments being done by the NITI alumni informally, as Paresh has said about saying that, no, there are seniors, juniors, friends have done it like that. Is there a possibility to develop very small investments? It's not at all big. So this is 2 points which I was planning to raise. When is the next webinar? Second thing is that is possible to have small investments possibilities into NITI existing students who just passed out informally, they want it. This is the second one. Yeah. And I'm really excited just to be part of this kind of a journey. It's a dream come to me to, listen to Meda, Deepak, Maneet, and Paresh, of course, Ganesh. Thank you very much.
Sir, पक्का salesman हो sir. Chance मिला 50 लोग ने तो आपने pitch कर दिया. Sure, sir. We will look forward to having something on that lines on how do we raise. I think I am an expert at that for sure. How do you raise money from alumni? if not large amounts, small amounts. I think I'll touch upon that. So I think Chandra also, thank you Chandra very much for providing this, because you've been
Thank you.
putting up across everything together. We will plan out for the next session. Rohit, bhaiya, aapke liye, last moments before we close it.
Yeah, so when I came to NITI, I came with an intention of becoming an entrepreneur. And I couldn't. That's the year when Dr. T. Prasad also joined the faculty, and we had our star entrepreneur. Our star was those days was number one Ganesh Natarajan, and number two Akhilesh Tuteja, who happened to become one of the youngest partners in a Big Four firm. He was not partner yet, but we knew that he was in a very strong path maker track. But now if somewhere where to join NITI, they will have people like Sojendu Medda, Manit Gohil, and they will have Deepak Ghanotia, they will have Bimal Kartik Reba. And again, they will have Ganesh Natarajan in a new hat again. And they will be talking about entrepreneurship. And that, I think, is a long journey, which makes me very, very excited about NITI and me. So thank you, everyone. Thank you, and keep on doing big things. Keep on shining light, and let all of us together help each other and go the distance that I think we are capable of.
So with that, I would take leave from all of you. Let's close the session. Thank you very much once again for being a participant. We had almost 50 plus participants during the peaks and almost stayed consistent across as well. So thank you very much for that. Thank you for asking a lot of questions that actually made, I could not cover all the questions, but still like we covered a major chunk of things. So thank you very much. With that, let's close the session. Over to you, Chandra.
Thank you.
Great job, Paresh. Thank you.
Yeah,
Thanks,
same here. Great job, Paresh. Thank you.
Thank you, Paresh. Thank you.
Thank you, one and all. Thank you.
Thanks. Anyway, first task, the second was increase the period. Okay.